Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. U.S. Stock Market Update, May 28th. This video presents a direct informational narration of the source document. So, diving right into the source document, it notes that U.S. stock market futures actually showed a bit of pre-market softness on May 28th. This initial market reaction really set the stage for a day heavily influenced by incoming macroeconomic data. Here's our roadmap for this explainer. First up, we'll track macroeconomics and geopolitics. Then, we'll move into earnings and sector surges. And finally, we'll wrap up with tech updates and compliance.
Starting things off with Section 1, Macroeconomics and Geopolitics.
Let's look at the specific breakdown of the April PCE data. The source points out that U.S. April core PCE hit a 3-year high of 3.3% year over year. But, importantly, it notes this actually met market expectations and didn't represent a loss of control. Meanwhile, the overall April PCE rose 0.4% month over month, which came in just a hair below the expected 0.5% and down from the previous value of 0.7%. So, what's the takeaway? The document concludes that these figures show overall inflationary pressure remains sticky. It specifically calls out that energy and services price pressures haven't faded just yet, and that's exactly what's preventing the Federal Reserve from pivoting to any kind of rapid easing.
Following that PCE data release, the source tracks some notably hawkish remarks from multiple Federal Reserve officials. Governor Lisa Cook stated that if inflation starts moving in the wrong direction, she is fully prepared to hike rates. Then we have Minneapolis Fed President Neel Kashkari, who noted that lowering inflation absolutely remains his top priority, as consumer prices are just still too high. Adding to that, St. Louis Fed President Alberto Musalem pointed out that inflation is significantly above target, suggesting the Fed should address rising real rates through further rate hikes. Finally, New York Fed President John Williams indicated that while long-term expectations look stable, inflation is going to remain high in the coming months. This means the Fed's next move could really be a rate hike, or just maintaining the current rate policy to observe further progress.
Next, the source document maps out an absolutely wild intraday market reversal driven by algorithmic trading. It all started with reports of a U.S. military strike on an Iranian military site, which was perceived as a clear threat to U.S. troops and shipping in the Strait of Hormuz. Naturally, this news caused oil prices and treasury yields to just spike, but then the market reversed sharply. This was following an Axios report suggesting a U.S.-Saudi memorandum had actually been agreed upon and was just awaiting signature. Right after this news hit, oil and yields took a nosedive, and equity indices spiked straight up, pushing both the S&P and NASDAQ to brand new record highs.
All right, moving right along to Section 2, Earnings and Sector Surges.
The source highlights a truly massive daily surge for Snowflake. We're talking about the stock jumping 36.5% for the day, and the document even notes it reached up to 40% higher intraday. This massive upward movement effectively erased 6 entire months of prior losses for the stock, bringing it right back to early December levels and simultaneously boosting the broader AI application sector. Over in the brokerage technology space, the document reports on the rollout of some advanced new AI earning hubs that consolidate analyst views and historical data. It also details new options visualization tools. These are designed to clearly display maximum profit, maximum loss, and break-even points for different option strategies. Plus, the source notes the launch of a trading competition up in Canada partnered with NASDAQ, featuring a prize pool of over 1 million Canadian dollars. Now, the document highlights a really interesting structural divergence in the manufacturing sector. It contrasts a massive 7.9% surge in April total durable goods orders, which it pins primarily on a spike in Boeing aircraft orders, against a 1.1% drop in core capital goods orders excluding aircraft. The text states that this 1.1% drop is actually the largest decline we've seen in a year. This suggests that current U.S. economic expansion is heavily reliant on the AI investment boom, while capital expenditures in other corporate sectors are remaining quite cautious. The document also presents several key economic data revisions. U.S. Q1 GDP growth was revised downward to 1.6% from an initial estimate of 2%, dragged down by softer consumer spending and corporate inventory investments. Meanwhile, weekly jobless claims came in at 215,000, and the market estimates unemployment will hold steady at 4.0%. According to the source, this specific combination, lower than expected growth, sticky core inflation sitting at a 2-year high, and a resilient labor market paints a picture of mild stagflation. And as a result, this will likely delay any anticipated Federal Reserve rate cuts.
Looking at index levels, the document notes that the S&P 500 is holding strong above its 5-day moving average and that 7,500 level. At the same time, the text states that passive funds are currently busy increasing their cash holdings. Why? They're preparing for index inclusion demands from upcoming mega IPOs, specifically citing SpaceX and OpenAI. Meanwhile, the small cap index just continues its march right toward that 3,000 mark. The document also tracks a massive capital rotation into small cap drone stocks. This surge was catalyzed by a Wall Street Journal report stating that the U.S. government plans to invest in domestic drone companies to boost production and lower costs. And the reaction was immediate. UMAC surged 57.2%, RCAT climbed 32.6%, and another unnamed stock in the sector rose 22.7%. The text observes that capital is currently favoring these nimble, small-cap drone companies over the traditional defense giants. Shifting gears to the quantum computing sector, the document details a major announcement out of IBM. The company plans to invest over $10 billion in the quantum computing field over the next 5 years. The stated objective of this huge initiative is to build the very first stable, large-scale quantum computer capable of flawlessly running complex operations, all by the year 2029. Looking at some specific tech movers, the text reports on NVIDIA experiencing a solid 8.6% rise. This upward movement actually coincided with news that an investment firm, managed by a 25-year-old AI investor named Sela, disclosed a 5.6% stake in the company. The document points out that this reflects clear, strong, and ongoing momentum within the sector. The source dives deep into Dell's Q1 financials next, and the numbers are staggering. They noted a massive revenue jump to $43.8 billion, representing an 88% year-over-year increase. Adjusted earnings per share hit $4.86, which vastly outperformed expectations. On top of that, Dell upgraded its full-year revenue guidance to somewhere between $165 billion and $169 billion. Finally, the text highlights that Dell secured a massive $9.7 billion contract with the U.S. military to manage Microsoft's software licensing, email, and systems design. Next up, the document breaks down Costco's Q3 performance. Revenue beat expectations, coming in at $70.5 billion. That's a 12% increase, with net income rising 15% to $2.19 billion. Same-store sales showed really strong growth across the board. 9.4% in the U.S., 10.7% in Canada, and 11.2% overseas. E-commerce surged by 21.5%, and membership fee revenue grew to $1.373 billion. However, there's a catch. The source notes that because Costco's valuation is currently sitting at around 32 times earnings, which is way above the retail average and actually approaching tech stock multiples, the post-market stock reaction was largely muted, despite these objectively strong numbers. Regarding broader retail concerns, the source conveys a stark warning from Walmart. They're indicating that high fuel costs are actively squeezing profit margins right now and could very soon be reflected in higher merchandise prices for consumers. While higher tax refunds have supported consumer spending recently, those fuel costs are totally offsetting the effect. Because of this, the document outlines a strategy of building small positions in defensive stocks during market shocks, noting that capital otherwise tends to favor the AI and space sectors over defensive retail plays during calmer periods. And that brings us to our final section, tech updates and compliance. The source combines several distinct financial technology notes here. First, it mentions the official launch of a US-backed child finance app, which was created jointly by BNY Mellon and Ohuhu. Second, it reports that Ohu has launched a brand new feature acting as an autonomous retail AI trading agent for its users. Finally, pivoting to politics, it notes that crypto industry political action committees are currently directing tens of millions of dollars toward supporting Republican candidates in the upcoming congressional races. Checking in on Microsoft, the text outlines that the stock rose 3.5%, closing safely above its 6-month moving average. The document cites reports that Microsoft plans to announce a whole series of new AI models at its upcoming annual developer conference. We're talking about a coding model to boost GitHub Copilot, as well as various models focused on specific tasks like voice-to-text, complex reasoning, and image generation. The document then details Futu's Q1 earnings, and right off the bat, it highlights a 61% year-over-year drop in net profit. But the text explicitly attributes this drop to the impact of a massive $1.85 billion fine. If you exclude that one-time hit, adjusted net profit actually grew by 6%. The source explains this is all tied to industry-wide regulatory compliance limiting mainland onshore deposits, noting the company halted new mainland account openings 2 years ago. On the flip side, their overseas and innovative business lines are really driving growth. Overseas clients now make up over 50% of the MO brand, with revenue in 5 specific countries growing by more than 100%. The text also notes a major regulatory milestone. It states that Moomoo and Futu Clearing have officially secured approval from the National Futures Association, or NFA, to operate prediction markets and clearing businesses. This infrastructure is fully complete and is expected to open up to U.S. retail investors very soon. It'll offer event and sports forecasting contracts, which the source suggests could see a ton of increased activity with several upcoming global sporting events on the calendar.
Finally, the source document concludes by looking ahead to the highly volatile pending earnings reports for software sector companies ZS, OKTA, and MODB. It leaves the exact impacts of these after-hours reports as an open question for the following day's analysis. So what will these numbers reveal tomorrow? We'll have to wait and see.